Today I'm sharing one of my top stocks to watch in 2021. Let's do it. What's going on, everybody? My name is Matthew. Welcome back to my channel, and today we are talking all things innovative industrial properties, ticker IIPR. To give you an idea of what we're talking about here, in Q3 they saw revenues grow 197% year over year. They saw net income increase by over 200%. Yes, they're profitable, and they're in one of the hottest sectors in the stock market today. Puff puff. Now, on top of all of this stock pays a dividend. More specifically, it's a REIT, or Real Estate Investment Trust, growing revenues at, yes, 197%. Now, to make it clear, I'm calling this a top stock to watch right now, and I'll give you a reason why I'm not calling it a top stock to buy just yet later in this video, so keep watching. Give me the format. First, as always, an overview of what this company does, how the business works, and other key points. Second, we'll take a look at their absolutely juicy financials and a peek at their current valuation. Third, we're combining the catalysts for this stock with the risky risk involved into one part in part 3, which you'll definitely want to see because it's very important. And finally, part 4, what am I going to do? Before we hop into this, I want to quickly remind you guys that the Patreon and Discord is now open for the month of January and accepting new members for this month. And in addition to the usual benefits of my buy-sell alerts, exclusive videos, and all of that good stuff, I'm also giving away this Tesla short shorts box. It's the box that those shorts came in, and inside is going to be a $100 gift card and a handwritten note from me. It's just a way to give back to the community and also start 2021 off with a bang. And of course, all top tier patrons will be eligible for this giveaway. So go ahead and check out the link below if you're interested in the giveaway and you want to find a community of serious long-term investors who are all trying to learn together. All right, no more time wasted. Let's get right into it with part 1, a business overview of IIPR. Rather than invest in individual puff companies, I would prefer to invest in something that provides the capital and the facilities to these companies, which is what IIPR does. So no matter who wins, IIPR walks away with a profit. This is often referred to as maybe the pickaxe strategy because in the gold rush, the miners who struck it rich were not usually the richest ones. It was actually the people who sold the tools and the means to go mining. And that's exactly what IIPR is doing for the puff industry. So what is their business model? And this is really important, so make sure you lock in here. They structure sale-leaseback deals with medical cannabis companies, and what that means is they find medical cannabis producers, buy the facility that they're operating in, so IIPR now owns it, and then IIPR leases it back to the same operator who now pays rent to IIPR. And it might sound weird for a company to sell their building to someone else and then rent it from them once they sell it. But let me explain why this makes sense and how IIPR is actually solving a massive problem. Today, puff producers can't just walk into a bank and get a traditional loan. In fact, any company remotely involved with this industry will find it hard to get a bank's attention. So if they can't get loans to borrow money and expand their business, they have no easy way to raise capital. This is where IIPR comes in, and let me explain with a digestible example. Say for instance, Trulieve, who is actually one of IIPR's clients, by the way, sells their facility to IIPR. Well, by selling their facility, Trulieve is able to inject a lot of cash into their balance sheet from that sale, which they can then use to grow their business, no pun intended. But since they no longer own the building, they have to lease it from IIPR, who is the new owner, which is why it's called a sale-leaseback transaction. I like to think of it as a parallel with a traditional loan from a bank. Say IIPR pays Trulieve $2 million for their facility. This would be like a $2 million loan that the bank gives Trulieve. Then Trulieve pays IIPR rent to stay in the building. This would be like Trulieve paying interest on a bank loan. So this is really a creative way for the puff industry to raise capital without having to go through the traditional bank route. Here is also a quick look at all of IIPR's 60 plus properties in the US today. And these companies need IIPR right now to be able to finance their businesses. And notice how I put an emphasis on right now, and I'll explain that later in the video. And to give you guys a better idea, here's a quick look at one of their sample lease deals. They want the deal to be roughly $5 to $30 million. The lease is usually 10 to 20 years long, which compared to the average commercial lease of 1 to 3 years is actually a very long time, and I suspect this may be them protecting the downside once banks are able to lend to Puff Puff companies. The initial base rent is 10 to 16%, and annual base rent escalations is 3 to 4.5%. So now that we know a bit about what IIPR does, let's talk about some of their tenants and their client base. IIPR targets companies that are well capitalized and have already successfully passed the rigorous state license process. Here are their 7 tenants that produce the most revenue for the company by percentage. You may recognize some of these names, such as Cresco Labs, Curaleaf, and Green Thumb Industries. And this is as of September 2020. One thing that I really like is that in 2019, IIPR maybe had a little too much of their revenue dependent on one tenant, PharmaCann. But since then, that percentage has dropped to just 16%, which is much healthier. And it's not because they're scaling down their deals with PharmaCann, rather they're scaling up deals with other tenants and new tenants. GM Insights believes the medicinal cannabis market size will continue to grow at 29% compound annual growth rate, or CAGR, up to 2025. And the ArcView Group projects sales of state-regulated cannabis in the US will grow from $12.4 billion in 2019 to nearly $34 billion in 2025. Medicinal cannabis is being authorized to treat or help a wide range of different illnesses every day and is becoming more and more mainstream. And I agree that I think there is massive growth ahead for this medicinal use, and it's something that IIPR specializes in. And we'll get into this in part 4, but more state legalization will only continue to allow them to expand their business. Now, before we get into financials, let's talk a little bit about their potential competition. Competition is really anyone who's willing to provide flexible lending and financing to these Puff Puff companies. And right now, we already know that banks are not quite ready to lend to them yet. So one of their more direct upcoming competitors for IIPR is actually another REIT called Power REIT, ticker PW, but with a market cap of just $50 million. And having just pivoted their business to medicinal cannabis from railroads and solar farms, PW will have a lot of catching up to do. As a side note, PW might be an interesting, very high risk, very high reward play for anyone who's interested. Alright, now let's get into part 2, their juicy financials and a peek at their valuation today. Starting with the balance sheet, we see $885 million in real estate assets after depreciation and $161 million in cash on hand, in addition to $450 million in short-term investments. All of their debt can be paid off with the cash they currently have on their balance sheet, but with this amount of cash, I think they're actually getting ready to deploy it to some new deals. In fact, they recently just made a $30 million sale-leaseback transaction for 2 properties with Forefront Ventures. And moving into the income statement, we can now see that meteoric rise year over year in revenues and net income, and an impressive 55% margin. Lastly, if we look at their FFO, or funds from operations, which is a commonly used metric for REITs, we can see some pretty incredible growth here as well. And if you don't know, FFO is a metric often used in REITs because earnings numbers and price to earnings numbers are often misleading. You see, equity REITs like IIPR own a lot of property, and those properties get hit by a lot of depreciation, and that is subtracted from their revenue on the income statement, which can make their earnings look lower than they really are. And that's why PE ratios for REITs is often not the best way to go about valuing them. To explain this a bit further, depreciation is actually what's called a non-cash expense, meaning if I go buy a house and it depreciates by 20%, I didn't actually pay anyone 20% in cash, I just lost that value on paper, but it doesn't affect my cash. So FFO kind of reconciles this by adding back depreciation to earnings, among other calculations. Therefore, it's a better representation of how the company is performing, the earnings and cash they're generating, and a better valuation metric than the PE ratio. And that's the next thing we're going to look at, a peek at their valuation. Right now, IIPR is trading at a bit of a premium, which is why I personally consider it more of a stock to watch. Instead of using price to earnings, we use price to FFO. This chart here shows the average forward price to FFO for each REIT sector, and it highlights Puff Puff as being right around the REIT average with 22.1. Now, I'm not entirely sure if this chart is using the next 12 months FFO, meaning Q4 2020 to Q3 2021, or if it's using 2021 annual FFO, meaning Q1 to Q4 of 2021. If it is using the next 12 months, meaning starting with the next quarter, Q4 2020, we can see the next 12 months projections of $7.09 in FFO per share. And if you divide today's share price by $7.09, you get a forward FFO of about 25.8, which would be a premium to the average Puff Puff REIT of 22.1. And personally, I'm not willing to pay that premium, but if you are, then perhaps this is worth a buy. But if we use 2021 estimates for FFO numbers, meaning Q1 to Q4 of next year, we get 169 plus 188 plus $2. Then I took a 60% increase year over year of Q4 2020's estimate of 149 to find $2.38 in FFO projected for Q4 of 2021. Now you add up all of these 2021 numbers to get $7.95 in estimated FFO for 2021. Divide today's share price by $7.95 and you actually get 23.02, which is not too much of a premium on the average of 22.1 today. And with the growth that IIPR is seeing these days, maybe this smaller premium is warranted. But before you make that decision, let's talk about part 3, the risky risks involved and the catalysts. The most obvious catalyst would be more states legalizing, allowing IIPR to expand their footprint, expand into more states, and increase their deal flow, which would then probably increase their top line and their bottom line. However, many say that federal legalization could actually be a threat to IIPR. And that's because federal legalization could mean that banks start getting involved in the puff puff space and can offer better financing rates for these companies. That would mean there's less of a need for IIPR's services, which is financing in a highly regulated space. So therefore, IIPR can't really charge the same premium that they're charging right now. So the idea is that federal legalization would reduce their edge and therefore decrease their potential earnings. However, if there is federal legalization, this could actually be good for IIPR for a couple of reasons. If banks do start lending to cannabis companies, then first, IIPR would be one of those companies. Right now, their balance sheet is not very heavily leveraged, meaning they don't have a lot of debt on there. But if they can get debt, if they can get a loan from a bank, they can then use that to go buy even more properties and expand even faster. So this could actually be a good thing for IIPR if banks start getting involved. Second, a lot of these cannabis companies that IIPR is dealing with do not have great credit risk profiles. This means that a lot of the companies that IIPR and banks would be dealing with have a higher risk of defaulting on their loans or their leases in the case of IIPR. And because of this risk, banks would also have to charge a premium on their loans, just like IIPR is doing right now with their leases. The idea that a bank would come in with, say, a 3% interest rate on their loans for all these cannabis companies once everything is federally legalized, that just doesn't make sense to me, and I don't think it's going to be that severe. But this is the perfect segue into the risky risks involved with this investment. Risk number 1, again, is that banks could become competition as Puff Puff becomes legalized, and they could come and undercut them. However, IIPR has kind of tried to protect this downside by making the average lease length of their leases an average of 16 years. Risk number 2 is that IIPR does work with a lot of startups as tenants, and startups are often known to have shaky fundamentals and financials, and cannabis industry is also known for shaky financials and fundamentals, so it's not a great combo, and the higher risk of default lies in those tenants. Risk number 3 is the lack in diversity of their tenant base, and by that I mean if something were to hit the entire Puff Puff industry, all of their tenants would be affected, and this would be really risky and dangerous for IIPR's portfolio. There is a lack of diversification compared to traditional REITs, which usually have a portfolio filled with different types of buildings and tenants. Additionally, because they're leasing to smaller companies, a lot of them are private, which means as investors, we have no access to their financials. So we really can't tell how healthy IIPR's portfolio is if we can't see the financials and the balance sheets of the people leasing from them. So with all of this in mind, mind, let's go into part 4. What am I going to do? I really like their business model. I think it's really clever, and I think it's a great pickaxe kind of play on the puff industry. But for now, for a couple of main reasons, which I'll explain in a second, I'm going to call them a stock to watch. Because although I love them as a business and I love what they're doing and their numbers look great, they're outside of my circle of competence. REITs are different from normal stocks, as you've already seen. They're valued differently. You have to analyze those transactions and really understand what you're doing because they can get really creative and convoluted. And I have to be honest with myself here and say that if they made a new transaction, I probably would not be able to tell if it was really good, really bad, or somewhere in the middle. I would just have to have a lot of faith in management. Therefore, I'm not quite comfortable enough to put this stock into my public growth account because if I do, I know that some people will not do their own research, which you should, and they'll probably just follow me, and I won't be able to tell when would be a good time to sell based on fundamental changes. Additionally, the fact that they trade at a premium is fair considering their speed and rate of growth. However, I think that a lot of their risks are a bit understated. I don't love the lack of tenant diversity and the lack of transparency in their tenants' financials, given that the cannabis space is historically kind of rough when it comes to financials. But I did want to share this stock with you because I think it is a very interesting play, and if there are any REIT investors out there looking for growth, or if there's anyone just looking for a new stock to research, I wanted to share everything that I've learned so far because I've already done the work and I do like the business and stock a lot. If it drops to really attractive levels, I may have to strap myself down to a chair and learn how to invest in REITs, but for now, again, I emphasize everyone should be staying in their circle of competence. An example would be me going heavy into ARKG because I can't really understand genomics on that deep of a level, but I underwrite it and let ARKG and their analysts do the work for me, and that's why I recommended them way back several months ago. So again, check out the Patreon and Discord link down below if you're interested in the giveaway and you really want to find a community of people who are eager to learn from one another and share long-term investing ideas. If you found any value in this video, and I hope you did, please make sure to hit that like button, subscribe, and check our quote of the day. You might just learn something. Make sure to follow me on Instagram for daily posts about my portfolio, stocks I'm watching, and all that good stuff. If you're watching at this point in the video, you are the real MVP. Don't forget your peace and thank yous.